got to the conclusion that if everything is correlated and driven by this same debt cycle, then you just want to back the fastest asset. And by a long way, it's crypto, which I keep pounding the table, have done since 2014 on Real Vision, that this is the biggest macro opportunity of all time. Since the first time I talked about Bitcoin on Real Vision, it's up 450,000%.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Real Vision co-founder and CEO Raoul discusses the latest market action and shares his key takeaways from how to save your future. Raoul explores the evolving tech investing landscape, the transformative impact of AI, crypto's role in shaping future wealth management strategies, and more. So without wasting any time, let's dive into the video.
People get that. So I think a lot of people have been thinking through it. I think what's interesting is most people agree what's gone wrong. People aren't sure how it went wrong. I'm demographics biased, other people are whatever. But they kind of all roughly agree with the problems itself. Debt, aging populations, excess intervention by central banks to try and solve these problems, all of these things, government interventions in the whole thing. But people have, financial markets are problem solvers by core. So they're always looking for different ways. And, a bunch of people would say, and have been saying for a long time, gold is the answer. And gold has done okay in this environment. It's protected global purchasing power. Hasn't created wealth, but it's kind of protected. Other people look at other ways of doing it. And I got to the conclusion that if everything is correlated and driven by this same debt cycle, then you just want to back the fastest asset. And by a long way, it's crypto, which I keep pounding the table, have done since 2014 on Real Vision, that this is the biggest macro opportunity of all time. Since the first time I talked about Bitcoin on Real Vision, it's up 450,000%. But what was really interesting is Elon Musk was talking earlier in the week about, okay, there's a panic to buy compute now. Most people have put in the sort of orders they need to put in. So going forwards, NVIDIA's growth may slow, whether it's next year or the year after, and it will inevitably slow, right? This is like a pandemic panic into purchasing stuff. But he's like, well, the next thing is you need transformers to step power down from power plants to chips. And it's like, we don't have enough in the world. He was speaking of Bosch, the German electronics company, and said, you guys need to make more of this stuff. We're about to run out of the ability to generate enough power to generate all of this stuff. And then he's saying, and then we got a problem with electricity. We're just not ready for the amount of power we need for this compute. So this story's going to keep unfolding, and we really have only just started.
The cryptocurrency market's capitalization has recovered sharply today, wiping out a good portion of the losses previously incurred. Optimism in the crypto market returned primarily in the wake of the Federal Open Market Committee, FOMC, meeting on March 20. United States Federal Reserve officials maintained their projection for 3 interest rate cuts in 2024, showing a cautious approach toward reducing their bond portfolio. In turn, their outlook indicated that they are not overly concerned about recent increases in inflation. Fed Chair Jerome Powell emphasized the need for further proof of declining inflation rates, but he also mentioned that it might be suitable to begin softening monetary policies later in 2024. The CME FedWatch tool now sees a 68.3% possibility of a rate cut in June. Bitcoin, Ether, and other cryptocurrencies started gaining shortly after picking the Fed's dovish signals, hinting at a resurgence of risk appetite among investors after recent market declines. Following the Fed's comments, this trend was further underscored by a 0.94% drop in the US dollar index, DXY, highlighting a shift in investor sentiment.
Everybody knows how messy the system is. I think the central bankers are not stupid. Everybody knows, and they know what they're doing. They're debasing currency to try to not let the system blow up, because all of the savings are with the retirees, and it's a big mess. So their one job is to not allow the migration into crypto land to happen too fast. I don't think they're going to stop it. I don't think they even probably want to stop it. I don't think the banks want to stop it. I don't think anybody wants to stop it. But I think their real job is to slow it down. What they don't want is Bitcoin as deemed to be a currency, a world currency. As an asset, as a store of value, knock your socks off. As an investment, no problem. You want to build on top as a technology, no problem. Just don't think of it as a world currency because that threatens the overall system. But I just think of them as throttling it. So even, I think all of us are laughing at the SEC trying to now call Ether security. I think it's just a delay tactic as ever. Just slow it down. My guess is there's more long-term holders. Later, you'll get the FOMO retail of everybody trying to do this. But right now, this is a lot of people like Bitwise, Fidelity, Franklin, everybody going to their client base, talking them through it, explaining it. This is more thoughtful allocation. The other thing that people haven't realized is you can now put it in your 401k. So the average millennial who's a buyer of the NASDAQ or the S&P 500 passive index products will buy this. And they'll buy it every 2 weeks with their paycheck. And so we will see a difference in the structure of flows, as Jamie's alluding to. It's just going to change. Probably means it's less volatile on the down cycle. It also could cause a full bubble on the up cycle this time around because you've got numerous new participants who could enter. And, this is a limited supply asset and 80% of it's hoarded. So it can get pretty tricky. So I don't know how it plays out, but I don't agree with Jim Bianco. I know a lot of purists don't like it because it's an ETF and not people opening wallets and self-custody. I actually think of it as a Trojan horse where we're actually teaching people about this product. Before you know it, they understand why they're buying it and they come into crypto land. So I think it's relatively good quality holders. Also, Hunter Horsley hinted that I think it's on the quarterly statements. You'll see who the big holders of the ETFs are. And he hinted that you'll be surprised who's on the list.
Bitwise, right, Hunter?
Bitwise, yeah.
Yeah.
The crypto market's recovery occurred in response to a persistent Bitcoin halving euphoria. The market remained optimistic about Bitcoin's upside prospects before and after its scheduled halving event in April. This optimism persists despite the cryptocurrency's 17.5% correction and a recent slowdown in inflows to its spot exchange-traded fund, ETF. For instance, Dudley Wan, the founder of investment firm Primitive Ventures, treats the ongoing Bitcoin price decline as the second stage of a three-leg phase around halvings, wherein BTC undergoes 30 to 30% corrections, but follows the moves up with strong bullish rebounds. Additionally, Standard Chartered forecasts that Bitcoin's price could ascend to $150,000 by the end of 2024, driven partly by increasing institutional investments in spot ETF. The surge in the cryptocurrency market has triggered a significant number of short position liquidations, hitting almost $180 million in just 24 hours. Bitcoin short positions led this liquidation spree, totaling $65.50 million. Others followed with $47.38 million in liquidations. Despite short sellers' challenges, the crypto market's open interest is rising, as noted by the crypto trading analysis platform Coinalyze. Open interest, which tallies the total value of outstanding futures contracts across exchanges, is a barometer for market activity and investor mood. A surge in open interest typically suggests heightened market engagement and positive investor sentiment. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.